Hi, Owen Davis here from Leafield Real Estate, and here with another guest speaker, a mortgage broker, Craig Forman from Kane Financial. Did I get it right?
You did well.
Okay, cool. All right, Craig, thanks for joining me.
Thank you.
Please give me a bit of, we're here in your office here in Bondi Junction.
Yep.
Give me a bit of a background of yourself, your experience as a mortgage broker with working with investors, and if you're happy to share anything, any personal experience with investing as well.
Great, thanks, Owen. Great to be here, and thank you for the opportunity to chat to you. Look, I've been in banking, I guess, for 20-odd years, which is why the grey hair is certainly real. Been in Australia now 17 years, so
Yep.
I've done my time in South Africa as well as London, and now obviously Australia. A banker by trade initially for a
Yep.
couple of years, and actually now a broker for nearly 16 years.
Okay,
So
great.
pretty experienced in this game. Established Kane Financial now 8 years ago,
Yep.
here in Bondi. We've now got 6 staff.
Great.
We've got a couple of loan writers, processors, and obviously a marketing team as well.
Okay. Is it mainly sort of investors or owner-occupiers that you deal with, or
probably
just...
upgraders and investors?
Okay,
Absolutely.
alright.
So the first-home buyer market has not been overly aggressive of late, although we are seeing a lot of them coming back.
Especially
into
with these
now.
prices in the eastern suburbs.
Eastern suburbs, absolutely right. So, a lot of our clientele are in the eastern suburbs and
Yep.
probably the North Shore, inner west, but a lot of the investment stuff is actually happening interstate as well.
Okay. Any particular states, or...?
A lot happening in Queensland, and we're starting
Yep.
to see a bit happening in places like Geelong and Adelaide, which
Right,
a bit of
okay.
interest to me as well.
Yeah, a few people have started to mention Adelaide.
Mm.
Not totally convinced myself
Yeah,
yet, but
yeah. To me, it's all about population and infrastructure spend, and I'm hearing there's a lot of money going into Adelaide,
yeah.
but the people, I'm hearing there's not necessarily enough people yet. But
Yeah.
maybe they're driving more people down to Adelaide.
And what's been happening with the investment market from a lending point of view, and what's happening right now, more importantly?
Lending has got a lot tougher, as we know. We've had post-royal commission, but also just banks getting a little bit scared, I guess, and restricting the lending and
Okay.
policies on lending. You've got a lot higher assessment of loans, looking at benchmark rates going up, existing commitments and expenses being verified, levels they've never been before.
Okay.
We're at that stage now where banks are asking for credit card statements for 3 months, transactional statements for 3 months.
Well, that's been happening for a little while now,
yeah.
hasn't it? Has it improved at all since the end of the Royal Commission?
And in terms of more being required, or
Or has it improved?
or has what?
Has the situation improved for borrowers in terms of all those extra requirements?
Look, I think the bottom line is you'll get a deal through, but it just takes longer to get a deal through.
Yeah.
So I think the answer is if you are, I wouldn't say squeaky clean, but if you actually have kept your affairs in order, you'll get the loan through, but it's just taken 2 or 3 times longer to get the loan through.
Okay.
And of course, borrowers are not able to probably borrow as much as they did
Yes.
or wanted to in the old days, because banks have got more prudent on I guess, benchmark rates and levels of debt.
Okay. And what's your typical client? You started to touch on it there, and if you're happy to share about your own personal experiences as an investor?
Sure, well, that one's easy to start. So I've got 2 investment properties.
Yep.
Fortunate to have one in Bondi itself
Yep.
and one in Surrey Hills.
Yep.
Both I bought actually in 2016.
Yeah.
One was off plan, which I said I'd never do myself, but I did. It's a Surrey Hills one, but it's actually gone really, really well.
Okay, great.
They are, leased out. They've had tenants from day one. They both have actually grown in value.
Yep.
So I'm pretty pleased with those. Our general clientele is probably the established business person, self-employed possibly, good job, got a home loan, looking to probably raise some equity against the home to grow their wealth, and that's where the investment side comes in. Property being such a important asset class,
Yeah.
we make sure that we're able to leverage off the equity in their home
Yeah.
for the deposit and cost for the investment property. So we would have plenty of clients who now have more than one investment property and see property as a very important part of their wealth and investment strategy.
Okay. And has the market picked up in terms of activity a bit more this year? So
Yes,
far?
absolutely.
Yeah.
I mean, we're
In the last
actually
few months.
Absolutely, we're actually
Okay.
as busy as I've been for probably the last 3 or 4 years.
Okay.
So we're seeing a lot of people. I think prices have come back to a point where investors are certainly happy to get back in now because they don't have the threat of foreign buyers or investors in the market. And we're also seeing first home owners now coming slightly back into the market because again the competition is less and also the price points are a little bit more achievable.
Okay, all right. And where do you see the market going for the rest of this year in terms of lending as well as the property market?
What's incredible is we're seeing rates coming down every day. So
Right.
again, we got some more reductions in rates yesterday from the banks.
It's mainly fixed rates?
Yeah, absolutely. So which is indicative of where rates are probably going to go in the near future.
Right.
And with that, we've seen some stimulation, I guess, in the property market as well. So, while most commentators are talking property coming off a little bit more towards the end of this year, I got to believe that there's going to be a time where it's going to turn again, and we're probably not far off, especially with rates being so low.
All right. Any advice for people trying to get into the property market, especially as an investor? What have you seen? With your whole experience, as well as what's happening at the moment. What should they do?
The bottom line is just when I say keep yourself clean, I mean that. Make sure that your current commitments are up to date, especially your current home loan. Because usually the investor has probably got a home loan as well.
Yeah.
But if he doesn't, as I said, make sure all other commitments, your credit cards are up to date, your personal loans, you're making your rent payments. Banks want to see that you can make your rent payments and your mortgage payments.
Yeah.
I guess have a decent deposit. Loans now for investment, you generally need at least a 10% deposit. The maximum loan banks will do is up to 90%, including mortgage insurance. So either equity in your current property to leverage and use, or cash. That would be my tips.
Okay. All right. Well, thanks for joining me today, Craig, and thanks for being a guest. And if anyone's, whoever's listening to this on our podcast, or if you're seeing this on any of our platforms, please reach out to us with any questions or any ideas for future topics that you'd like to see. So thanks for joining us. See ya.
Thanks.